Hi, good morning, Carl. And yes, I am honored to welcome here ECB President Christine Lagarde and Treasury Secretary Janet Yellen. We are here at the Treasury for IMF World Bank meetings. Thank you for doing this. I've wanted to do this with both of you for a long time. It's good to see you both.
Thanks. Pleasure.
Secretary Yellen, have to start with the market, which is having another bumpy day, down another 500 or so points on the Dow. And it has been a rough start to the year. Are you concerned about all the volatility as Treasury Secretary now and the influence that might have on the country's mood, sentiment, the economy? Your predecessor, Stephen Mnuchin, once called the stock market a report card on the White House.
Well, the stock market I don't take as a reflection of the underlying strength of the economy. I think the U.S. economy has been remarkably resilient, and when you think of all the shocks that have afflicted the U.S. and the global economy, the pandemic, now the war, Russia's war in Ukraine, commodity price increases, supply chain issues, the U.S. labor market is doing extremely well, and frankly, I take that as the strongest indication of how the economy is doing, and we've continued to create jobs and are, back above pre-pandemic levels in terms of output. So I think the U.S. economy has been very resilient in the face of an enormous set of shocks.
How has it changed, President Lagarde, the war in Ukraine, your view of the European outlook?
It has had a very sad outcome, because I'm thinking about the people in Ukraine. I'm thinking about the people who die. I'm thinking about the devastation and the economic severe damage that it's inflicting on Ukraine. Now, you will argue that Ukraine is not part of the European Union, but it's applying for membership, and it's just next door to us. So it's as if, the ugly face of the war was returning to our shore, which we thought would never happen again. So that's the first, horrible shock that is inflicted just next door to us. And as Secretary Yellen said, it has an impact on all our economies around the world, but probably a little more so in Europe because of the proximity, because of the geography. It was General de Gaulle who used to say that you can only govern if you know your history and if you have a map of the world. And clearly geography speaks loud and clear, and we are taking a triple hit, if you will. One is trade, which is luckily relatively minor in a way. The second one, which is major, is commodities. And the third one is confidence. And on these three accounts, it's clearly going to lower and has lowered growth, and it will have an impact on inflation that it will increase going forward. So it's downside risk on growth, upside risk on inflation at a time when all of us were recovering pretty strongly after the biggest waves of the pandemic. So, we are in this sort of response mode in order to deliver on our mandate. Mine is price stability and yours is the economy.
Well, so do you think inflation is going to get worse, or do you see it having maybe peaked in March?
Well, it may have peaked, but look, inflation has been high, and I think the shocks emanating from this unjustified attack on Ukraine will prolong inflationary pressures. So the outlook is uncertain. As you know, the Fed is taking steps to bring inflation down, but I think we'll have to put up with high inflation for a while longer.
Right, and the ECB, as you've said, is focused on curbing the stimulus program. You'll determine by the data whether you're ready to raise interest rates to respond to inflation. Is there growing dissent within the ECB? Are you all on the same page on that? And what do you do about some members that want to be a little more vigilant on the inflation fight right now and raise rates?
We started that journey, which you described, back in December, because we are data dependent. We look at our projections, we look at survey, we look at consumers' expectations very, very carefully. We monitor the risk of second round from price to wages to prices to see how anchored or de-anchored or re-anchored our inflation expectations are in Europe. And we decided back in December that we had to move towards stopping the special emergency purchase program that we had. We did so at the end of March. We decided later on, February and March, yet again reconfirmed that we would be reducing the net asset purchases, which had been the traditional purchase program to support the impact of interest rates. And this is, very likely to happen in the course of the third quarter, with a high probability that it will be early in the quarter if numbers continue to be the way we have seen them. But we have to be data dependent. And we are sequential as well. So we will stop net asset purchases in due course, as I said, third quarter, high probability early in the quarter. And then we will look at interest rates. And sometime after the end of net asset purchases, we will look at increasing interest rates. It's not fixed and set yet as to exactly when we do that, but the journey has been approved unanimously at our last Monetary Policy Governing Council meeting. And we are on that path, and we're going to just carry on step by step as we've agreed.
Is there a chance that you would not raise rates this year because growth disappoints?
We look at inflation numbers. We look at inflation expectations. We look at wages. And we look at how we can best deliver on our mandate of price stability. If the situation continues as predicated at the moment, there is a strong likelihood that rates will be hiked before the end of the year. How much, how many times remains to be seen and will be data dependent.
Meanwhile, the Fed has already started raising rates, and there are now expectations in the market that we're going to see 3 50 basis point hikes over the next few meetings. How many can we handle without the economy going into recession?
Well, look, I strongly believe in the independence of the Fed, and similar to the comments that President Lagarde just gave, I know they will be looking very closely at incoming data, that their strategy is always will be data dependent, and their objectives are, of course, to bring inflation down and to make sure that inflation expectations remain aligned with price stability, but they will calibrate what they think is appropriate to achieve a kind of soft landing with lower inflation, but keeping the economy on track and growing.
Wanted to hit on something, Secretary Yellen, that you said this week as it relates to Europe, which is you told Europe to be careful when it comes to an embargo of Russian oil and gas, and that it would be very damaging to the global economy. Can you elaborate on what would happen if that does go through?
Well, look, I want to make clear it's really up to Europe to decide. We are fully supportive of Europe's plan to reduce its dependence on Russia for energy supply over time. We recognize our own situation with respect to dependence on imported oil and gas is different than Europe's situation, and it's up to them to decide what to do. My comment was simply that we've already seen a jump in oil prices. Oil and natural gas prices have been especially high in Europe, and there is a possibility that, for example, imposing an import ban on Russian oil could boost prices even further and raise energy prices further throughout the entire global economy. We've spent a good deal of time this week in the meetings we've been in worried about the overall global outlook, and particularly emerging markets with high debt that have high exposure to commodity price increases. Higher global oil prices could have a damaging effect on the global outlook as well.
It's a problem because Europe is currently sending $850 million per day to Russia for oil and gas. So how do you think about the impact on the economy, and do you have a contingency plan if Europe does decide to cut that off?
I think the comments made by Chair Yellen is particularly relevant with respect to the purpose that we have. Is the purpose to implement a boycott, irrespective of what the outcome, or is the prospect and the purpose that we all pursue to reduce the proceeds that is collected by Russia? And if the outcome of the boycott that would be decided by the Europeans would be to increase what comes into the treasury of Russia, that's a complete failure of the intended purpose that we're pursuing. So, do the Europeans at large look at alternatives, plan B, other sources, diversification of supply, intensification of non-fossil fuel sources? Absolutely. The European Commission, together with the European leaders, have decided to actually move towards a complete ban of the supply of coal. And they're now looking, that's what they're saying, I'm not privy to those conversations at the moment, but they're looking at how we can move towards reducing significantly the supply of gas and finding alternative sources. You may have seen that, for instance, President Draghi for Italy has gone to visit a few countries until he was stopped by COVID to see alternative sources. The German authorities have gone out to Qatar. There are lots of discussions taking place between the US and Europe at suppliers, purchasers levels to find alternative sources of supply. But we need to be guided by the ultimate intent that we have. And that's clearly underway and under close review and hopefully good news soon. Yeah.
Because of the energy dependence, is Europe facing stagflation? Is that a real threat right now?
If you define stagflation as a prolonged period of recession and very high inflation, the answer is no, on the basis of what we are seeing at the moment. So we're not seeing stagflation either in the baseline that we have or in the scenarios that we are considering. But there is a lot of uncertainty at the moment, which will depend on the efficacy of our sanctions, the scope of our sanctions, any other measures that are taken down the road, and how the war develops as well. So it's on the basis of current facts that I can say that pretty, affirmatively, but we have to be attentive to what's coming.
On the sanctions front, you also spoke a little bit tougher, Secretary Yellen, on China recently, calling on them to use their influence to end this war in Ukraine and threaten that they risk a changing attitude from the global superpowers and the global economy. China has not condemned Russia. They appear to be buying Russian coal, Russian energy. Why are we not putting sanctions on China?
Look, what we want to be careful of is that China doesn't do anything to undermine the impact of our sanctions, and their continuing to buy coal and oil isn't a violation, isn't a way of attempting to evade our sanctions. We would like to see China actively work to resolve this crisis and use their relationship with Russia.
Why aren't they doing that?
Help bring this to an end. We hope that they will be more active, but I have not seen China really undermine the impact of our sanctions and their behavior so far.
Do you see China as a downside risk, both from what's going on right now in COVID, where they're locking down a city like Shanghai, and also a potential wider geopolitical confrontation or conflict with China?
When we look at the tail risk at the moment and concentrate on China, there are some potential tail risks arising out of China. We have suffered the bottleneck period of the COVID. We know now from the Kiel Institute study that there are about 12% of goods that are just pending, waiting somewhere in the world to unload, to arrive at ports and containers to be driven to destinations. 12%, it's the third time that it's at the highest level at the moment. And there is no doubt that it is related somehow to the blockage and the lockdown that is imposed on Shanghai because of the Chinese anti-COVID policies. I don't think it's only limited to Shanghai, by the way. I think it goes beyond that, and there are other centers of activity which are reduced where activity is reduced as a result of the COVID policy. So yes, it is an issue for the rest of the world. It is certainly an issue for China as well, because when we look at the projection for growth that they have, it is certainly much lower than what they had expected and were hoping for. And we heard 4.8% as opposed to 5.5, which before that was even 6%. So domestically, the economy is also taking a hit as a result of these anti-COVID policies. And you have to add to that, I think, the real estate and housing sectors, which are, as we saw in the last few months, also suffering. So it's not a rosy situation anywhere, and it certainly doesn't seem to be the case in China. So we are interrelated. We are suffering as a result of that.
I mean, I know you said that the U.S. economy is very strong, but there are all of these risks. We're talking about slower global growth. We're talking about the Chinese lockdowns, inflation remaining high and perhaps continuing to climb. For those investors that have worried lately about a U.S. recession this year or next, what do you tell them?
I don't expect a recession. Obviously, we are living in a time that's very challenging, and developments in Russia, Ukraine, and commodity markets, the Chinese situation, these are all risks. But the IMF recently, this week, issued their new World Economic Outlook, and they downgraded their growth forecast for the United States this year, but they're still expecting growth during the year
3.7%.
of 3.7%, which is very solid, especially given that we have 3.6% unemployment. But, we have a lot of strengths in the United States. We have just a very strong labor market. Household balance sheets are in good shape. Financial institutions are strong. And that's a strong starting point. So there are risks out there, but I'm expecting a solid year for the real economy.
Do you worry about a European recession?
Well, look, the shocks that the global economy is experiencing have a negative impact on growth and, unfortunately, are escalating inflation. And those are problems to all countries, including Europe.
Do you worry about a U.S. recession?
We try to support each other. Whether we worry or whether we cheer, I think there is a great level of support and cooperation between us. And this has certainly been rejuvenated, if anything, as a result of the Russian invasion of Ukraine. It helps finding out where the friends are.
Well, and one final thing that I do want to mention, because of the war and because I'm speaking to you, who are two of the most powerful leaders who are women, which often doesn't get said enough, which is the female victims, as in most conflicts. And I know it's something that you are both thinking about, and President Lagarde, you always make a point of talking about those who suffer the most as a result of some of these wars.
And that is absolutely the case. I'll tell you something. I think women were the first victims of COVID. When you look at numbers, because we're beginning to collect numbers now post-COVID, you see that those who lost their job most, see that those who cared for elderly most, those who found jobs with great difficulty after the pandemic, were much more women than men. Numbers are coming in. About 6% of women lost their job out of the pandemic, 3.2% of men did. Just as an example, not to mention the perennial issue of lower salaries for the same job. And if you look at the war, it's obvious that not only women actually have enrolled to fight in the war, so they're brave and courageous, but they're also the prime victims, because they're the prime persons who are raped, who are victimized, who are, killed eventually in the atrocities that we have seen. Children and women were not spared of these. Women are often used as weapons by the enemies. It's always been the case in wars. I don't think that this one is any different at the moment.
Well, thank you for drawing attention to it. Well, a depressing note to end on, but also an important one.
By the way, I want to mention one. You remember the governor of the South African Central Bank?
Yes, I do.
She knew a bit about war because she had gone through apartheid and the outcome of that. Yes. And she used to say, men go to war and women clean up the mess. I bet you it's going to be the same yet again.
We need more female leaders. Thank you both so much for taking the time and for doing this special conversation. ECB President Christine Lagarde, Treasury Secretary Janet Yellen. I'll send it back to you, Carl, in New York.
Sarah, such fantastic work. That's our Sarah Eisen with a historic interview in some ways. Amazing to see them together. Thank you, Sarah. Joining us to help us break down some of the headlines we just heard and today's move lower in stocks, Mike Santoli, our senior markets commentator. The lead's going to be that inflation it has peaked, perhaps, from Yellen. But there's a difference between saying that and that we're going to get relief on the other side.
That's right. She did say we're going to have to deal with elevated inflation for a while to come, even if it has peaked in March. I think that in general, the conversation portrays that it's a pretty narrow path to a soft landing that's going to be, somewhat comfortable. I think that's pretty fair, even though, Christine Lagarde did say no stagflation. Well, what does it mean even to have a recession or even slow growth with elevated inflation? I think this whole spectrum is out there and possible. I think it's what the markets have been really struggling to account for a while now, as we have valuations come down and you have a lot of the hot money cool off.
And the other interesting thing is the ways in which we're tied to the EU so closely, and yet how much more acute their vulnerabilities are right now for three big reasons, as Lagarde said.
For sure. I mean, they are dealing with, in a way, the rate shock at the same time they're having this inflation and growth scare is much more dramatic because of where it's coming from in terms of from negative to positive rates and all the rest. So I do think that's something that we have to consider at a time when we're also worrying about, the China shutdown supply chain thing, Chinese currency acting up. All these things, I think, make for a pretty complex backdrop, even one that we were not used to from last year, when it seemed like pretty linear path to a good outcome.
Yeah, Mike, there is that China piece. And Sarah asked Secretary Yellen about potential Chinese sanctions, but we didn't really get any indication that those were in the works. This is a day when we're seeing those beaten down Chinese ADRs really rebound. Do you think it's a reminder, perhaps, that there is more that policymakers could do that would affect them to the downside, or perhaps a suggestion that they may not actually get through? We may not see anything.
Obviously there's more policymakers can do, and that has to be one of those risks that hovers out there. It doesn't seem very front burner at the moment in terms of, if you want to prioritize the things to worry about. I mean, maybe that's one of the reasons to worry about it, because we're not already fixated on it. But, I don't know that that's the real immediate swing factor for those stocks. Clearly, policymakers trying to fight multiple battles here, right? I mean, obviously against inflation, and then you have the sanctions piece of it. And the complexity of the backdrop, I think, is what has made for the market frustration.
Right. Stepping on the accelerator and the brakes at the same time in some ways. Mike, thanks. Great interview, but thanks to Sarah. After the break, a lot more on Snap and the broader market. Plus, check out shares of Verizon, the company losing 36,000 phone subs, which was actually less than the 49,000 expected. And shares down almost 6% in what is admittedly a tough tape. Tech Check will be right back.